The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, joining us now to discuss the crypto markets is MarketVector Indexes digital asset product strategist Martin Leinweber. Welcome, Martin. So Bitcoin is pretty steady today, just still under around the $19,600 mark. But over the last week, we've seen 7% price swings. So what's your outlook on Bitcoin? Is it just mimicking U.S. stocks?
Well, that's a good question. So if you look at the market, I think the hot air has already left the crypto industry. So when macro goes down, we also go down with it, but we are not going to go down in an outsized way like we went down from January to May this year when everyone got liquidated, the 3AC stuff for the Terra Luna debacle. And now we've kind of found some sort of floor, but this floor can go down because of the macro moves. So let me give you a few examples. You mentioned the Bitcoin intraday range was 7%. We also saw that for banking stocks, and such swings. That's something you'd expect to see when major announcements like QE or rate cuts are made, but we didn't see it. And it's amazing to see this happen after Janet Yellen expressed concern about the bond market liquidity one day before the CPI print. So these violent reversals were undoubtedly concerning, and they were hardly indicative of a healthy market. And I believe it simply demonstrates that negative sentiment had reached extreme levels. And what does this mean for cryptocurrency? The interesting thing here is that this is one of the few times when the realized volatility of equities, if you look at the 10-day realized vol, is higher than Bitcoin. And that has only happened 4 times in the last 10 years. And each time it was only a few days. So we'll have to see how sustainable that is.
Yeah, we have this chart that you gave us showing, the MOVE index. And you were saying in your notes that the bond markets seem especially broken and are suffering from illiquidity. So how does that compare to Bitcoin's volatility?
Yeah, that's very, very interesting. And I think the whole bond market stress is very important for crypto, especially Bitcoin. When you examine the relationship between the volatility of US Treasuries, as measured by the MOVE index, you mentioned it, and the volatility of Bitcoin, you will notice that the increase in volatility of bonds, relatively speaking, is even greater than that of Bitcoin, and particularly since the Fed's tightening. And the volatility of bonds, not the rate level, is killing it. Yeah, you can't trade with a daily volatility of 10 basis points in Treasuries. A market maker is afraid to bid on more than 50 million in 10-year bonds because he might wake up a second later and we are down half a point. So you basically lose liquidity. And also for other participants, they get higher margin requirements, and the system simply shuts down on itself. So the Fed must act regardless of whether inflation is high or low. Because if the bond market fails, banks suffer because the bond market is the plumbing of the financial system. And if they act, crypto should benefit once more, especially Bitcoin, because I've mentioned it last time, Bitcoin has lost its narrative as an inflation hedge, especially as a CPI hedge. But in a world of macro chaos, it's hard to believe there isn't substantial value in a non-state controlled hedge against unstable monetary regimes, wherever those regimes might be. And a currency like asset class that is not controlled by the government is bound to be an important hedge for a growing number of people.
So what is it then? What is the narrative for Bitcoin? Is it an inflation hedge, or is it a risk-on asset that follows stocks?
It's both. It's both. I think what Bitcoin is not is a pure CPI hedge. If you track it against the CPI, especially in the last month, it's not the best hedge. But if you track it against monetary
how can it be both a risk-on and risk-off asset?
Well, I think it's both a store of value in the long term, and you have a kind of a long call for the future as it's part of a new system. And I think that's very interesting. So if you plot Bitcoin against the monetary printing, against Fed's balance sheet, for example, it is a hedge. And especially if you look still at the March lows till today, we are still up. Whereas bonds, for example, if you look at UK gilts, they've lost a decade worth of total return just in a few weeks.
Interesting.
So I still that's coming back to Bitcoin, the store of value narrative.
Martin, I also we have some incoming news this morning. The incoming UK Treasury Chief Jeremy Hunt saying today that the new government is reversing nearly all proposed tax cuts and would limit an energy price cap to reassure the country's finances. Would like your reaction to this action, and whether or not these government actions, might have a positive impact on calming markets?
Well, I think initially now the market is in a positive stance again when it comes to the UK. But I think you see that all are worried about this constant turnaround and shift in policy. And that's the reason why the volatility of bonds is so high. And as I told you, bond market hates an increase in volatility, especially if you look at the gilt. I mean, they have 40 basis points move. Sorry, I have to comment on that.
Martin, quickly, so what is the strategy to navigate through all this volatility?
Well, I think it just comes back to precision sizing, yeah. And I think what's really beneficial is to be diversified. For example, to have a multi-token basket of the larger coins, and to have not only the store of value character, but maybe also something in the smart contract world and the DeFi world, not just to bet on one thing, but as you do in the traditional world, just to be diversified. I know it sounds boring, but I do believe that it works in the long